So let me say good afternoon to some, good morning to the rest of us here. Welcome. My name is Jim McDonald with Torrey Hills Capital, and today we are hosting today's call featuring Microbix Biosystems, a developer of proprietary biological and technological solutions for human health and well-being. And without stealing all of the thunder from today's presentations, I want to highlight a few things. So one, the company trades both in the US on the OTCQX under the ticker symbol MBXBF, and also on the Toronto Stock Exchange under the ticker symbol MBX. And then some financial highlights I will cover quickly here. For the fiscal year ended September 30th, 2021, the company reported revenue of 18.6 million, which represents a 77% increase over the prior year. And also for the 3 months ended December 31st, 2021, company reported revenue of 4.9 million, which represents a 54% increase over the prior year. And joining me today from the company, I have Cameron Groome, the company's president and CEO. Before I turn the call over to Cameron, just want to go through logistics fairly quickly. For those who have been on calls with me in the past, I think you know how it works, but just as a reminder, our Zoom calls are intended to replicate our in-person meetings, which we like and encourage to be as interactive as possible. With that in mind, if you have questions along the way, please feel free to ask those questions. Do not wait until the end of the presentation. And quickly, as a reminder, if you do have a question and want to ask it, the best way to do so, of course, is use the navigation pane at the bottom of the screen. Click on the Q&A or the chat button and type in your question. We'll see that. If you don't want to do it during the presentation, want to wait till the end, we will have a more formal Q&A session at that time, and also allow you to unmute microphones. So if you want to speak directly to management, the best way, of course, to do that, again, is use the navigation pane. Click on the raise hand button. We'll see that, allow you to unmute your microphone, and you can have an open dialogue with Cameron. So keep it interactive. And with that said, I will remain on the call, although remove myself from video and audio and moderate questions as they come in. Enjoy the presentation from Microbix, and Cameron, it is all yours.
Perfect. Thanks, Jim. Remind me just what our target timing is, about 20 minutes, I presume?
You know, I mean, we have an hour in totality, so however long you want to do for the presentation. I think, you know, if you do 30, 40 minutes on the presentation and then 20 minutes of Q&A, I think you're good.
Perfect. I'll target 30-minute run through then, and perfect. we should be in great shape. So thank you everybody for taking the time today, much appreciated, and we'll give you a good run through of what we're doing and why Microbix might be appropriate for you to consider in your portfolio. As I mentioned to Jim, what we are going to run through today, I thought it would be fun for us to just go through a little bit about Microbix as was presented at our annual general meeting a couple of weeks ago now, and give you a bit of context of the past about Microbix, how we're now a 35-year-old company with a deep expertise that's hard won, that's now very much hitting our stride. We broadly support the infectious disease diagnostics industry with ingredients, with test controls. We'll go into a little bit about what that means, and with sample collection devices as well. We've achieved profitability already on sales of greater than 20 million Canadian dollars per year currently, and we're positioning the company to support sales of at least $100 million per year right now. As I'll go through in this presentation, we've got the leadership, we have at the board level and the senior management level, we have the personnel, we have the facilities, and we have the systems, and we're in the process of strengthening those systems and capacities in place to execute on that plan. And happily as well, we're already well capitalized and publicly traded, as Jim was indicating, and at a valuation of somewhere around half or less than peer companies that you might consider. So go through a little bit of that. Of course, this presentation will contain forward-looking information, and I'll try and be as concise with the rest of the deck as I am with the safe harbor statement. This, as I mentioned, presentation was given at our annual general meeting, but maybe it'll provide a bit of context for you as well. And it's sort of broken into three broad categories. One, a little bit about the history of the company. It's always helpful to know, where you've been informs where you are, and where you are in turn informs where we're going. So you'll see the little hourglass for the historicals, the analog clock face for the present day, and the digital one for the future, just to help track as we go through the deck. So as I mentioned, the company's been around for a while now, and it was founded by Bill Gassel, a virologist whose father was quite literally a country doctor in a small Ontario town, but worked and practiced medicine for more than 4 decades, and was very involved with different public health laboratories across the province, tracking whether the measles strain in northeastern Ontario was the same as what was happening in southwestern Ontario or northwestern Ontario. And when you know a bit of Canadian geography, there's some pretty big spaces, so these things can vary quite a bit. And from that history, Bill developed a real interest in virology and bacteriology and infectious diseases, graduated from the University of Toronto, and he began making some of the culture medium for the public health labs, and was very good at it, and soon was asked to start helping them with culturing the actual organisms of interest, and that included bacterial strains of disease, root-based strep, etc., and viral strains such as measles, mumps, rubella, etc. And Bill incorporated the company. As often happens with entrepreneurs, took it public too early for a lot of the wrong reasons via reverse takeover transaction, with sales of about $500,000 per year. Very small for a public company, even in any standards. But the company started to get asked more and more by companies in the infectious disease diagnostics industry that said, hey, we're making immunoassays, the antibody-driven or serology tests, and to make those tests work, the best way to do it, the gold standard of tests, is to use a purified and inactivated native organism to recognize the antibodies in your blood and be able to drive the chemistry and the biology, the intel inside at the heart of the tests. And Microbix started making that very critical biology at the heart of tests for a bunch of different companies across the industry. And ultimately commissioned a specialized facility in Mississauga, Ontario, for manufacturing those critical test ingredients, which when they're purified and inactivated are referred to as antigens, technical parlance that you wouldn't have heard in the common lexicon before COVID, but a little more familiar now. And after many years in 2012, Bill stepped away from the CEO position. My predecessor was appointed, and I actually joined the board at that point with sales of about $5 million for the company. But there were a lot of excursions over this period where Microbix was pursuing big opportunities, business lines that were going to each require tens of millions of dollars to complete development of, and perhaps weren't as realistic as they might be for the company's ability to complete those projects, to bring in the capital and complete some massive endeavors. So I'm a little bit more of I describe myself as a ruthless pragmatist in some ways. And when I came in, I was determined we'd focus the company on the specific areas of profitable growth and work on that achievement, and make sure the projects we took on were really within the focus areas of our core expertise. So, did we have the technical knowledge? Did we have the customer relationships? And did we have the capital, the resources, and the facilities to bring these off? Where we started to steer the company at that point was from being a maker of largely non-regulated test ingredients to being a manufacturer of specific medical devices that used our expertise and that were fully regulated and in fact, under ISO accreditations. And we began quickly to gain some success in that with awards for innovation, with awards for export success, and built up a portfolio as well as an international distribution network of these sorts of products. And then, of course, in 2020, a lot of plans were upended as a result of the COVID pandemic. And you might think, well, diagnostics company, there's a company in the diagnostics field, how could COVID be anything but good for you? Well, the very breadth of our business being involved in areas like maternal and pediatric childhood diseases, sexually transmitted infections, a lot of diagnostic procedures just weren't happening because of COVID. And in some cases still aren't. That patients haven't been seeing doctors as much, and doctors haven't been willing to see patients as much. And a lot of procedures have been reduced. So COVID's been very much a mixed blessing for us, and we've grown as much in spite of COVID as because of it. But with some successful repositioning of our product lines and so forth, we've actually been growing quite dramatically. We grew sales 77% year over year last year, and we've achieved significant profitability. And now we're really leveraging the product expertise and the relationships we have to expand our sales to a whole new level. And that will be what we're positioning for, is at least a 5-fold increase in the level of our sales from our current run rate, with expanding gross margins, EBITDA, and net margins. And we'll touch a little bit on each of those categories. So in the last 12 months, we have achieved record sales of 18.6 million Canadian for the fiscal year. We have a September 30 fiscal year. Our 12 months trailing run rate right now is over 20 million. We had material net earnings of close to 20% bottom line margin and positive cash flow. We've also created some important new product lines we'll touch on. And we finished the commissioning of our second manufacturing and administrative facility, and are in the midst now, well, not in the midst, but just about to complete commissioning of the third site. And we'll touch a little bit on that as well. And a lot of what we're doing now is modernizing systems to support that scalability. I'm going to date myself a little bit by using the Lucille Ball and the chocolate factory analogy, where if you want to be actually manufacturing stuff, it's not just about doing it quicker and turning up the speed of the assembly line. There's a lot of systems that have to be able to be scaled and sufficiently modern. So we're digitizing our quality management systems so that each batch of product doesn't require a telephone book size binder for the control, but all that work is fully digital. And likewise, our enterprise resource planning systems to support the very complex supply chain and inventory management issues that we work with. So we'll touch on a little bit of that as well. Where we are today, we develop, make, and sell to companies all over the world. North America and Western Europe are our largest markets, but we also are developing significant presence in Africa, Asia, Australia, New Zealand, and Scandinavia. So we're operating and selling all over the world. Up until fairly recently, only a de minimis amount of our sales were coming from Canada, but that's changed. Even as our sales and export markets are growing, our sales domestically have taken off as well. And there are three broad product categories into which we sell. One is what we call CAPS, or quality assessment products. And these will go into what they are, but they're mimics of positive and negative patient samples for different diseases or categories of diseases, so that you can actually check and tell whether a test is working. So thereby avoiding false negatives, where you're not picking up the presence of an infectious agent like COVID, for example, and avoiding false positives, where you're falsely telling somebody they have a disease that they do not have. And each of those false negatives and false positives, as I'm sure you've read in media over the last 2 years, have potentially devastating consequences. We also moved to create a further product line of viral transport medium. And these are the tubes of stuff when you see somebody snap off a nasopharyngeal swab and put it in a tube of liquid. That liquid is a specially designed medium to stabilize the infectious organism so that its DNA or RNA doesn't get degraded in the sample before it can be tested at the central lab. And we already made tens of thousands of liters of complex cell culturing media every year. So we formulated a very good viral transport medium to satisfy the domestic demand that was occurring and bail out the supply chain issues of our province. And we're in the midst of further scaling of that manufacturing as well to support Canada more broadly and perhaps export. And then I mentioned our ingredients business still comprises about 50% of our sales today. And that side of our business has actually been hit, as I mentioned, quite significantly by COVID, just due to the very breadth of our portfolio. So we're very much broadly involved in this diagnostics industry, and are the very furthest thing in the world from a COVID play that rises or falls on the basis of that. And I can certainly go into that a little bit, defending that statement in our Q&A as well. So where we are now as a company is we're very much primed for continuing sales growth. We're primed, we are ever increasing the pace and sophistication of our product development. We're expanding our gross margins, and we'll go into give you some precise numbers on what we've been doing in that regard. We've taken from the high 30s to the low 60s in terms of gross margin, with commensurate expansion of EBITDA margins and net earnings. And all this, of course, is geared, why should you care? It's to drive share price appreciation. And our whole board, management team, and senior staff are significantly invested in the company with both owned shares as well as options. So we've got downside as well as upside, which is a very important nuance for the management, the kind of management engagement investment we want in the company. The three product divisions I mentioned are our quality assessment products, and they're also sometimes known, those of you maybe in the industry, as external quality assessment or proficiency testing products. We sell them to those agencies. We sell them to test manufacturers and also to clinical labs. And one of our strategic agreements in that area is a collaboration with a company called Copan Italia. And if you've been anywhere on planet Earth in the past 2 years, you've probably had a Copan Italia swab stuffed up your nose. They're considered the best in the world for a lot of technical reasons. And Copan we are the only company that they will permit to build controls onto their swabs for the purposes of these sophisticated best quality management products. We also, as I mentioned, are making our DXTM branded viral transport medium. And we flagged in the pandemic that, our home province of Ontario, Canada, would have supply chain issues as others would, and said, we can make this for you. Would you like us to? And they said, hell yes. They provided us a grant of $1.45 million to accelerate that process. We delivered first order in fiscal 2021, received in April and delivered by the end of September for $4.25 million of that product. A second order that's now being delivered for $4.7 million. And actually, we've just been notified by the province that our project is considered successfully concluded. They've releasing the holdback on the balance of the grant funding. We started producing this product at 50,000 vials a week using a semi-automated production. We've since double shifted that to 100,000 a week, and we're readying for full automation that will be going in late spring, early summer of this year, that will enable us to go to single shift production of 50,000 units a day, and all squarely within our competencies. And for our antigen production business, we have over 100 customers, global test makers that purchase products from us and export all over the world. And you can imagine the connectivity that this brings to us and drives for us. Each of these product lines have specific performance and commercial advantages. For our caps, it's performance. Our products tend to have the whole genome of the virus, which is, or bacteria, which is very important. They, wherever possible, control the full test workflow, and that we're getting into a little bit of the technical weeds on, you know, how you run a lab and how you avoid systemic errors in your testing, but that's very important. Ideal formats and tremendous versatility in terms of what we can create. So, for example, if you wanted me to create you a control for the Ebola virus, I could do that safely and economically, or controls for multi-drug resistant venereal disease, we can do that very safely and economically, and really not only guide the diagnosis, but guide the therapy. And we have, for example, every relevant variant of COVID, we have a whole genome COVID control for everything from the original Wuhan strain right up through Omicron, and are widely used in industry around the world. Our DXTM medium for specimen collection, similarly, and you know, our ingredients business, again, that being the anonymous intel inside, you don't know that branded, you know, global name brand company ABC or DEF or GHI has Microbix antigens in at the heart of their tests, but they do. And it's us to take those relationships and that core expertise and build it concentrically and responsibly into new areas that drive the top line and bottom line growth of the company. And that's what we're all about doing. And, you know, this provides us with really great connectivity. And, you know, this list I put together across customers and collaborators that we work with, just that popped to mind as I was sitting at home over a Sunday coffee with a pencil and a piece of paper, and put this slide together. And this involves maybe about half of the relationships that we have ongoing on a regular basis, but just some of the ones that most readily pop to mind for me. And you can see, you know, organizations and companies in all these different categories, makers of diagnostic tests, clinical laboratories, makers of immunoassays, laboratory proficiency testing and accreditation agencies. All this informs our product development and where we want to go, and of course increase the touch points with all of these accounts and all of these collaborators to drive sales growth for our company. And we're really starting to see the benefits of that. And I can't wait to show you some of the slides on some of our financial numbers. And there they are.
Cameron, is now a good time for me to interrupt, or?
Absolutely, Jim. Please, no, go ahead.
Apologize. So I think these came in a little bit ago, and I wanted to let you get through part of the presentation. So so from Barry, what's the time period for the 100 million in sales?
I think we'll get there within 3 years. We should do somewhere in the, you know, close to 25 million in sales this year. We'll should certainly be north of 40 million in fiscal 2023, somewhere in the 40 to 50 million range. And I think we'll be within spitting distance of the 100 million number in fiscal 2024. And that's a September 30th fiscal year. So we're really on a very good growth track. You know, we have the products and we have the relationships, and we're demonstrating that we also have the capacity now, which is the big thing. You know, if customers are relying on us for a critical component within their test kits, for example, we can't fall down on the job there.
Sure. And then Barry had a follow-up to that. Is the sales growth all internal, or does that include planned or known acquisitions at this point?
Certainly we do get presented the opportunity to acquire things, but we're pretty circumspect about that. Those numbers don't require any acquisitions to drive them. We look, you know, at acquisitions and we say, you know, can we build it? Can we rent it? Or do we need to buy it? And, you know, it's only if we felt the need to buy something or the want to buy something that it was strategically or tactically important to we'd go with that, because I've been in capital markets for 16 years before going into life science operations. And I've done M&A advisories, and I've got a healthy respect for the integration challenges of any acquisition. So we've got to make sure that we can digest anything we buy. So I wouldn't rule it out, but our growth does not require point blank.
Okay, hopefully, Barry, that answers your questions. One final question here. How were you able to increase margins so dramatically?
This comes with two aspects. In our ingredients business, it's been about optimizing manufacturing and modernizing practices. So just operational rigor as well as modernization. And the other driver of margins has been moving from the ingredients business to innovative, proprietary, and branded, fully regulated medical devices, which, as you can imagine, have a higher margin. So, we take, for example, a Copan flocked swab for sampling that costs tens of cents, and we turn it into a diagnostic test control that costs tens of dollars. So there's a very good, margin increase in that creation of sophisticated products. So I'll give you an example. Last year, if you said, I've got respiratory distress and I want to test, I might have COVID, or I might have respiratory infection, you'd get a COVID test. This coming season, you probably would go and you'll get a test that simultaneously tests for COVID, influenza A, flu A, influenza B, flu B, and a virus called RSV, or respiratory syncytial virus. We already have the products to support that 2022-2023 controls need, and we're working on the products for the 2023-24 season, which will be probably tests that look for 10 or more viruses simultaneously. So you go in and say, I've got respiratory distress, then the doctor knows exactly what virus is involved, and public health knows exactly what's circulating in the community, and it can better direct therapy. And that same kind of thing is happening, whether it's for high-risk human papillomavirus that causes cervical cancer and a whole bunch of other soft tissue cancers in men and women, whether it's involved in urinary tract infections, sexually transmitted infections, gastrointestinal infections. All this multiplex and point of care testing is coming, and we're supporting companies very broadly on these spaces. And if you look at some of the data on our website, where we presented posters at different conferences, you look and be a little shocked that the companies who are collaborating with little Microbix on these endeavors are amongst the largest and most sophisticated in the world. So that's where we're positioning ourselves. We don't have money to go and launch a new point of care instrument system and support it globally. I know people that are doing that have $500 million in the bank and are wondering if it's enough. That's punching way above our weight. What we're doing is we're creating the best in the world controls, so that every box of 25 to 50 test cartridges will have a Microbix control in there. So you sacrifice every 25th or 40th or 50th cartridge to check that the system is still working properly. And that avoids the systemic errors that can hurt a lot of people. That hurts people if somebody's told, no, you don't have COVID, you can go back into work at the critical care unit or the nursing home. It hurts people if they're positives and they go, oh my gosh, cases are shooting up and we've got to lock down a community again, or shut your business, send everybody home and potentially go bust. These are the things that we're helping to avoid. And if a company is selling, for example, 10 million test cartridges a month, they would need, at a ratio of 1 to 25, 400,000 controls a month. And we have customers that are saying, Microbix, I'm going to need 10,000 a month flavor A and 10,000 a month type B. And we have companies saying you better plan for 100,000 units a month of A and B and C. And that's what we're gearing for. And our portion of the value chain is in that 5 to 10% range, is in the controls that we manufacture and include. But if we fell down on the job and didn't deliver, that company's losing the other 90 to 95 cents of sales. So being able to ensure that we're a reliable partner is critical. And that's why we're investing in systems and upgrades right now that we'll go into, and we'll show you a little visual on some of our facilities. But all this work is what's paying dividends, and you see it in the percentage gross margin, you see it in the revenues, dollars of gross margin, percentage of gross margin, the EBITDA, and the improvements in falling debt and increasing current ratio and current assets. So, we're very much looking. We don't need cash. This is all about awareness and building capital market support. The last thing I want to do is be an ignored gem and then have somebody come in with a change of control premium and take us out when we should be trading at 3 or 4 times the current multiples. So this is why we're working with Jim and why we like building this awareness with investors like yourself. Capital structure, we have a market capitalization right now of about 75 million Canadian. With the Ukraine war, I think volumes have fallen a little bit on a lot of small caps, and healthcare stocks have gotten hit certainly since the beginning of the calendar year, and we're no exception in that trend. But nothing with regards to our operations. We're moving along right now at about plus or minus 5 million a quarter revenue level, and we're positioning to a breakout towards 10 million per quarter that we're targeting our Q4 to be very strong and demonstrate that breakout and move into fiscal 2023 on that level. We've got lots of cash on the balance sheet. We cash flow positive and very manageable capital structure. We've got a bit of historic debt, but it's a 9% coupon, so not overly burdensome. And an expat billionaire friend of the founder. In terms of corporate objectives going forward, well, you mentioned about, how are we growing margins? Well, for our antigens or ingredients business, it's continue optimizing processes to maximize margins. And this business has gotten hit by about 1/3 down since COVID began because of its very breadth. And that will pick up as more normal patient care patterns resume, as those diseases certainly haven't gone away. And if anything, if undiagnosed, they'll have gotten worse. For our quality controls products, we're continuing to broaden that product line. We're up to about 80 SKUs now, and building that strategically, not just to add SKUs, but add things that we can drive big volumes of. And for DXTM, we're automating to make sure our costs come down further and that we're globally competitive and that we can add customers outside of Ontario. Right now, we kind of have a mixed blessing that Ontario is largely buying most of everything we produce. So we need to scale further to be able to go after other Canadian provinces and federal procurement as well as customers. So this is all the stuff we're doing to scale. And I'll go into a little bit of how we're doing that to move forward. And likewise, we'll continue to evaluate product opportunities that really naturally grow off of the customer relationships and the technical expertise that we have. How we'll achieve that, we've got great board, and I'll go over that. We've got wonderful management staff. It isn't just me, a talking head on a Zoom call. There's an absolutely wonderful team that I have the privilege of leading, and it's doing just superlative work. We've got the customers, we've got the sales channels, and what we need to do is demonstrate that we can deliver at the scale required from some massive customers. And part of that is making sure we've got the support and control systems to enable that scaling. It's not a matter of, oh, my app went viral and we wrote it, now everything's golden. When you're actually making stuff, you've got to keep making it, make it reliably, consistently, and be able to scale the batch sizes and the frequency of those batches and not have any wheels come off your wagon. Board of directors is fantastic. Martin Marino is our independent board chair, comes out with experience with Merck Generics Group and Apotex. Peter Bletcher, an MD, a prolific entrepreneur in his own right. Mark Cochran, recently retired as executive director of Johns Hopkins Medicine with expertise in the medical field as well as capital markets and venture capital. Von Emerald Pantaloni, my predecessor and Audit Committee chair. Joe Renner, incredibly successful entrepreneur, co-founder and chairman of Zydus Pharmaceuticals, which I think is about #4 in the US right now in terms of prescriptions filled. And just joined by Jennifer Stewart, a government relations and communication specialist that's helping us in a lot of make sure we have a seat at the table from a regulatory and policy perspective as well as procurement as well. In terms of the senior team in management, my CFO Jim Curry is fantastic, great experience in the life sciences field. Ken Hughes, who is the CEO in his own right in the life science space with good success, and that I convinced to come back and help me with this build, and just doing a fabulous job. Phil Caselli, our SVP of Sales and Business Development, just wonderful in managing customers all over the world and leading a growing sales and BD team. And Mark Lucier leading our R&D and QC groups, driving a lot of the innovation that we're doing, and just wonderful strength and depth of our bench at the director and manager level as well, going down through the organization. So we've really got some great sustainability from the HR perspective. Product lines, we've got the products, we've got the customer access, and we have the sales channels as well. One of the things that we did in the midst of COVID was actually build out a global distributor network for our quality assessment products, and we're now actively being sold into 30 countries by 9 international distributors as well. And the same way we built the distributor network, we're building out our OEM relationships for the provision of caps with major companies, kits, and disposables, so consumables. So that's very, very good for us. Facilities, we have 3 facilities totaling about 35,000 square feet. Our first facility was our antigens operations, where we have BSL level 2 or containment level 2 suites that we're renovating the core of that facility to be able to go to BSL 3 and do our ingredients and hot biology. The second building, 235 watt line, I've got them actually geographically going from left to right here, but the order of acquisition is a little different. That's where we're doing our caps, our controls production. And the third facility that we're just finishing commissioning up this month is where we'll be moving in the automated viral transport medium production. So again, very, very real business. We've got north of 100 employees now, and these 3 sites operationally, and I wouldn't be in the least bit surprised if I'm talking about a building 4 before the end of 2022, just based on what the sales pipeline looks like. And that's not difficult. We own a 265 watt line. We have the other 2 under long-term lease, and it's really, the cost of a long-term lease is relatively trivial. It's what we do with the building that matters, and we're very good at converting them into high-tech manufacturing very economically. So some of the things we're doing to future-proof, I mentioned digitizing our electronic quality management system work. We've engaged with a leading firm in that field called Master Control. Likewise, they're upgrading our ERP to a NetSuite Oracle product, and we'll be moving forward with digitizing lab practices more broadly, just getting the paper management out of our lives entirely, just to make sure we can work at the required intensity and scale. And all this work is ongoing and disclosed, and you'll see it in recent news release disclosures from the company. So, conclusions and takeaways. I'm a few minutes past the target time, but I hope you've enjoyed it. Alongside directors, management, staff, you would, this was intended for shareholders, but you would or will, if you choose to buy some shares, own a business that has unique capabilities built up over more than 3 decades. I shudder to think what it would cost to recreate our expertise, the cell and seed banks that we own royalty free. We have exciting product lines, customer relationships, and the market access. We have vision as to how we're going to grow. We've got the human resources, the infrastructure, systems in place, or we put into place and upgraded. I represent we're being effectively governed and managed, and we're investable. This isn't a blue sky binary outcome kind of business. We're already listed, we're cashed up, we're profitable, and it's about growing and providing returns to shareholders. I currently have committed my capital. I've bought about 2.375 million shares. As of yesterday, I exercised some more in-the-money options that I was awarded when I came. And that's capital that I didn't need to commit. So that's money I have on the line. And our other directors have hundreds of thousands to millions of shares, approaching 10 million in one case, of committed capital. And we have senior scientists that own 100, 200,000 shares that they've bought in their own judgment as well. So we're definitely invested, and we're serious business people running a serious business. So we thank you for considering it and taking this intro and perhaps a deeper dive from here. So with that, I'll stop screen share, and if there are any further questions or anybody that wants to type in, by all means.
Yeah, so just a reminder to people on the call today, if you do have questions, use the navigation pane, click on the Q&A or the chat button. And Cameron, I don't know if you can see those questions now.
I'm just looking at them now. I was
okay.
So management and institutional ownership, yeah. We have management owns collectively, I'd say close to 20 million shares, so call it 15%. Institutional ownership, we have quite a number of firms that do own shares. Some of the specialized Canadian healthcare funds own shares in Microbix, and in some cases, up to 5 million shares on institutional single accounts. I think some of the companies that have cited as record that they own the company like it would be firms like Pathfinder Asset Management out of Vancouver, British Columbia, Next Edge Capital, a specialized life science fund in Toronto, Selective Asset Management, and we have quite a number of retired chief investment officers that own significant holdings in the company as well, that we're affiliated with firms like AGF, Acuity, and other major funds that I once worked with when I was on Bay Street, that know that I'm a serious individual and wanted to come along for the ride. So yeah, we've got some good support. Some U.S. ownership starting. There's some firms in the West Coast in California and the East Coast in Massachusetts that are quietly accumulating shares, but I wouldn't be comfortable, naming names at this point. I'd say institutional holdings are probably in the 20 to 25% range. So you're looking at 45%, for example, of shareholders voted at the annual general meeting the other week. So we've got, we do have a fairly reasonable float. We do know certainly a good chunk of our shareholder base. Question, vial demand increasing and decreasing as COVID testing decreases. We've had this question, a number of times. Ontario's testing peaked out at, close to 100,000 tests a day at one point, and then the government massively restricted access to testing, and it's still running in the 20 to 30,000 units a day range. The important thing to recognize is we're not making COVID transport medium, we're making viral transport medium. In fact, we're making universal transport medium. So whether this is used for COVID, whether it's used for broader respiratory panel testing, or whether it's used for human papillomavirus testing, for example, we don't much care. We've become a mainstay supplier to our home province and are aiming to supply other provinces as well. And that need for domestic supply isn't going to go away. You know, I'm on another board that imports, you know, some products from Asia, and I'm advised that it is 16 weeks now to reliably get a container out of a manufacturing hub in China to a distribution center in North America. And that just is not practical when you're dealing with public health issues. So we're one of 3 suppliers to Ontario, and we're the only domestic one. So we don't see that going away, and frankly, neither do they. So we certainly look for a continued level of the viral transport medium sales going forward. Question, the company has performed well financially, revenue, gross margin, EBITDA, et cetera, as you described. Share price has been good, but not necessarily keeping up with operations. Any thoughts and any anticipated catalysts? Great point. You know, I kind of look at it and say, you know, on a day-to-day basis, the market's going to do what it's going to do, whether it's risk on, risk off, you know, smaller caps in favor, out of favor. We just keep winding the spring, and sooner or later, the jack in the box comes out. You know, it's not to say we ignore the communication and financial markets communication, but really that the business has to drive that. And we're most focused on the fundamentals of our business and making sure that it's creating the real sustained value, and then we'll communicate that on a regular basis. I think some of that is distractions around, you know, we've gone from, you know, COVID to civil unrest to Ukraine. You know, people are still getting whipsawed constantly with market conditions, and we are still relatively small cap. You know, we're under 100 million Canadian capitalization. That's, you know, micro cap or nano cap. So we don't, you know, have delusions of grandeur in terms of where we fit in the big scheme of things. But to the extent that you're looking for smaller, high growth investable companies in your portfolio, please do consider us. So that's the ask. Next question, you know, who follows us in terms of equity research? We have one analyst currently at IA Private Wealth, a Canadian investment dealer that has formal research coverage on us with a buy recommendation and target price. I think we're at $1.25, 12-month target price. We have another analyst that covers us, very respected former research director, and we engaged him to do some company paid research, just because he's incredibly well respected north of the border, has run research departments, and just a fabulous analyst. He's got about a $2 12-month share price target, working on his 2023 forecasts. And I'd like to think we'll get 1 or 2 additional investment banks to pick up coverage over the balance of 2022, and then we'd have a little bit more of a quorum. So good question. Thank you for that. Which of the 3 businesses will be driving growth over the next few years? I think the biggest growth driver will be our quality assessment products. Our test controls will be the largest area of revenue growth from us. We've already taken that business. Historically, it was doing, you know, about $1 million, $1.5 million a year. We've tripled that over the last 12 months. We will at least double it again this year. I think we were targeting to triple it, but there have been supply chain difficulties with some of our customers, that they couldn't get microchips to make, you know, point of care instruments, or they couldn't get reagents to release kits. So we've managed our supply chain challenges, but some of our customers haven't been so fortunate. So that's slowed things down a little bit. But so we're probably about 6 months behind where we hoped to be as a result of those issues, but it's not holding us up, and we'll continue to see that growth. So I see, you know, our antigen business in the near term, our ingredients business recovering towards, in the next, you know, 12 to 18 months. It should recover from the, call it, $8 million a year range it is now, towards the 12 million plus that it was trending, that it achieved and was trending higher from pre-COVID. Our viral transport medium business will certainly be looking to take that into 10 million plus range. And in our quality assessment products business, that will be certainly moving from, close, on the south side, 10 million this year to, multiples of that in years following. So that's the biggest growth area for us.
Great. I don't see any additional questions in the queue right now, but just a reminder, if there are some, use the Q&A or the chat button, or if you want to speak to Cameron, use the raise hand button. One question I have in the interim, as I look at this, right, it seems like it's truly an execution play. You're funded right now. You're not looking to do funding. I mean, perhaps if an acquisition came up, there might be a need for it, but outside of that, organically, there's not. You're currently profitable. You're sort of on a path, as you described, towards 100 million. So I guess my question to you is, the proverbial, what keeps you up at night?
It's not disappointing customers. We have to deliver our component in that value package. So, we want to make certain that we're able to work at the scale that's required. So, I'll give you an example, Jim. Historically, we were doing, say, 100,000 units a year of small liquid vial format quality assessment products, and that was 100,000 a year. Now we're doing 100,000 a week of the larger VTM vial formats, and moving to 50 times the rate of production. It was not a trivial exercise, and we successfully executed that. In our swab-based quality assessment products, in the first year we offered those was 2020. We did about 10,000 units. We sampled out 5,000 paid samples towards the end of our fiscal Q3, and we had a trickle of reorders, roughly the same amount that we put out in Q3 and Q4. So we did maybe 10,000 units, and then we did more than 12 times that number the year following, and we're on track to do multiples of that number this year. So again, you're right, it's that execution and that scaling. And that involves, stepwise automation of processes, automate the pinch points before you move through in full automation, make sure your quality management systems are tracking appropriately, that your batch scaling doesn't get disrupted. And that's all ongoing stuff. One of the things that does, that I do look at now as well, is we're entering a much more inflationary environment, and we've got to, work carefully with our suppliers and customers that we're able to not get surprised on the supply side, and likewise not surprise customers on the price increases that we'll have to push through in coming quarters and years. So managing those issues as well, I think for all businesses, we've got to watch out for, and that comes with staff comp as well. We've successfully upgraded our compensation levels, but we've got to move that stepwise with profitability and be able to pace ourselves in that regard.
Oh, great answer. I appreciate that. Well, I don't see any questions in the queue currently, but great presentation. I do like the newly reformatted, or for us, it's new format for the presentation. Very compelling story. I mean, currently profitable with plans to go from 20-ish million right now up to 100 million, and as you just said, what keeps you up at night is not disappointing customers, which to date you really haven't. So there's no expectation, and you seem to be sort of thoughtful in terms of your rollout. So expectations are that you're not going to. So let me thank the attendees. Great questions today. I will give out today's keyword. Being in San Diego, we're having our first home game of the baseball season. So opening day will be our keyword for today. Looking forward to the Padres and the Braves. And with that, maybe I turn it back to you, Cameron, for what I consider to be sort of elevator pitch closing thoughts.
Yeah. So, well, thanks, Jim, and thank you everybody for joining us. What I'd leave you with is we're a really investable company, high growth, all about execution, and disciplined execution at that. And very much have a look for the appropriate component of your portfolio or your clients' portfolios I'd like to think if you do a deeper dive, you'll find we're the addition and a stock you want to own. So thank you very much for taking the time. Your time is valuable. We'll get you out of here a couple of minutes earlier with a hearty thank you, and don't hesitate to follow up via Jim or with me directly as you prefer.
Terrific. Cameron, thank you very much. And everybody have a terrific long weekend.
Thank you, Jim, and thank you, everyone. Take care.
Bye-bye.